Mortgage rates. Well, the 10-year yield is down considerably, so mortgage rates should be lower as well. And Diana Olick, are they down enough for it to really make a difference?
Well, it depends on who you ask. But look, the average rate on the 30-year fix just hit the lowest level since last October. It dropped 12 basis points to 6.63%. That, according to Mortgage News Daily. Rates had been moving in a very narrow range really since the end of February. So this is one of the biggest daily changes in a while. At face value, that's a welcome sign as we get into the heart of the historically important spring market. But there are still considerable headwinds for housing, namely tariffs, and you can see that in the homebuilder stocks, down about 5% despite the drop in the 10-year, which mortgage rates follow. Even with lumber tariffs still on pause, builders are worried about higher costs for everything else that goes into a home, and you can bet they're going to pass that on to consumers. Now, Realtor.com released its March housing report this morning, saying there was a 10% jump in new listings year over year, with active listings up 28.5%. But it also found homes sitting on the market longer and the share of listings with price reductions rising. Pending sales, which are signed contracts on existing homes, dropped 5.2% from last March in the nation's largest metropolitan areas. And yet another report from Redfin this morning said monthly housing costs in March were at a record high based on still rising home prices and still high mortgage rates. So this drop today, Kelly, it's going to help a little bit on the edges. But when you add in consumer confidence, you add in the new cost for the builders, you add in everything that goes into a home when you buy it and you need to remodel it, that's going to weigh heavy on potential buyers.
Pasodi said, let's talk real. This was a viewer who said, let's talk real estate. How are the tariffs going to affect the housing market? And I would layer on top of that, Diana, the comments from Gary Friedman. So he says it's the worst housing market in 50 years. But you'd think Restoration Hardware should be like Lamborghini, right? If people are going to pay $2,000 or whatever it is for a table, couldn't they pay $2,500? RH passes that along. They maybe get some margin as well. Like it's just not the place that I.
Very highest end of the market. That's not where most people live.
No,
most
that's my
people
point.
Are not. Yeah, they're not shopping at Restoration Hardware. They're shopping at Walmart.
Exactly.
And when you buy a house, you look at a $400,000 home, the median price over $400,000. Most people cannot afford that, and at the current rates, they can't even qualify for a mortgage on a house that they think they might be able to afford or that they're even reaching for, because mortgage availability is going to be, crunched by this as well. The loan to values, the debt to incomes, all of this comes in when you look at how much more we're paying for everything else.
Meaning more that, you look at the auto industry, the analogy is Lamborghini, right, or Ferrari. RH should be in that category, not down 40%. So I find that if they're feeling the impact, it must
Everybody will.
Everybody. And look at Wayfair today. They're also down 25, 30%. That's much more the price point where people are trying to go. And I'm sure the supply chain that relied on Asian manufacturing.
Exactly. And also, if you just look plainly at consumer sentiment, we know this is their largest investment is a home. And when you're worried about your job and you're worried about paying more for groceries and you're worried about everything else in the economy, you're not going to put down all that money for your single largest investment.